Welcome to Code and Concrete, the leading podcast for prop tech, conversations about the built environment, and other exciting innovations. If you learn something new, please consider following and leaving a positive review. Enjoy. Hi, folks. Joining me in the studio today, I have David Tucker. David is a real estate developer and builder with more than 2 decades of experience across land sales, custom homes, remodeling, mortgage notes, subdivisions, townhomes, and retail developments. After starting his career in 1999 selling more than 350 acreage properties, David went on to build more than 50 custom homes and develop a practical understanding of what it takes to move real estate projects from idea to execution. Through wind and water homes, his work focuses on capital raising, homeownership, and disciplined project delivery. David, thank you so much for coming on to Code and Concrete.
Thank you for having me.
It's going to be a very unique conversation. I have not had any home builders. I've had some folks in real estate development and other stakeholders, but you bring a fresh, awesome perspective to the show. So I'm looking forward to this. Let's start by unpacking who you are. Who is David? How did you get into home building, and what's it been like over the past, 27 years?
I got into home building just by default from doing the development side and land sales. When I first got into real estate in 1999, my fiance at the time and myself were looking to build our first house. Had the pride of home ownership in our sights, and so we went and bought some acreage property with the anticipation of building our own house. So at the time, I was in my mid-20s, and home ownership at that time was the goal. Everybody wanted to own their own home, and we figured we might as well build ours and capture some equity at that point and get exactly what we want out of the home. And so we went into the home building world just because we wanted to get what we wanted out of our first home.
What were you doing before you got into home building?
That's actually a funny story because I was waiting tables. So never even dreamt of being in real estate. Just fell into it because we ended up buying the property, and the gentleman that we bought the property from was talking about how great of a career it was going to be. And so it took me probably a good 6 to 8 months before I launched into it and just dove headfirst into it.
That's incredible. So you went from waiting tables to building a home to nowadays, it seems like you have a residential empire. You're sort of a mogul of sorts. That's incredible. Before we get into like some of the questions that I put together, I just want to know, over that almost 3 decades worth of experience, you've seen, at least one recession, you've seen tragedy across the country. How has this experience grown for you over those years?
So I like to say I have a Harvard education because I've spent enough money to get it in real life. But yeah, those experiences have certainly shaped being able to foresee some cycles, the changes. I actually started my own company, left the company I was working for in development when I first got into real estate, left them in 2008. And so that's when I started my company. So it was a very interesting year for anybody that can remember 2008 historically. It was very, very difficult to get started, and we launched very quickly, and then nobody could get a loan for building a custom house at that point. So then we had to make a shift immediately. So we learned very quickly how things can turn, and you've got to be able to make shifts.
100%. Well, let's start. Go ahead. Did you have?
I was just going to say the different cycles that we've gone through. It's even in an up cycle, you've got to learn how to make shifts, because every time there's a turn, whether it goes up or down, there's a whole new challenge with it. In 2014, when we moved back into developing, cities couldn't get things pushed through quick enough to get developments done. So it created a whole new challenge that we had to shift and move with. So it's definitely given us a different perspective on being ready for any market versus just preparing for the negative market.
Right. 100%. Well, let's go into the early days of when you were getting into real estate, what that first chapter looked like. So I really want to know, as you were cutting your teeth, as they say, what did you start to learn about buyers, about land, and the psychology of homeownership. Because you mentioned that you were really attracted to that ideal of people owning where they live.
I grew up in a time where the goal was to own your own home. Your home is your legacy. It's your best investment, your biggest purchase of your life, right? And so you own your home, you live in it, you pay it off, and that's part of your retirement. So that was just kind of our path, and our goal was to build a home and get exactly what we want, and own it long term. And at the time that we first got into the real estate market, or the real estate world, for me, you know, that was the only thing I knew about it. And, now I think fast forward nearly 30 years, I think a lot of that viewpoint has been lost. So, but I think it's also just because in today's world, it's a little bit more discouraging to own a home. And, and I think that the buyer market is having that issue right now. So,
What is discouraging about owning a home right now?
I personally think that, the media, well, it starts with education, first of all. And I don't think people are getting the education about owning home ownership, or the value of owning a home in today's world. And then you couple that with the media is just bombarding people every day with high interest rates, and there's high maintenance with owning a home, and it's just so much negativity around it that they've forgotten that the whole true American dream is home ownership. And so that's why we focus on entry level houses now. Is that's kind of our mission, is to turn around and try to re-educate and re-promote, if you will, home ownership.
Right. I read somewhere that there's a shortage of entry level housing. In terms of square footage and cost, they've really been bloated in the past decade, it seems, and so a lot of people resorted to renting. Is that an accurate claim? Have you seen that there is a shortage of entry level houses in a decently desirable area?
Absolutely. I think part of it is just the population wise as well. Like I don't remember the numbers off the top of my head, but if you look it up, I think there's a need for like multi-million number of homes just to
Hmm.
meet the population needs. Affordability is driven by that, just because not everybody can afford, a $500,000 to $1 million home, depending on your markets, right? So most people, when we get this many people in population, they've got to have a place to live. And so, affordability becomes the rental market.
Right. It's all supply and demand, and
Correct.
there's a surplus of demand, there's a shortage of supply. I mean, you're a home builder, so what what is driving that shortage? Like from your experience, I'm sure you wish that you could build as many homes as you possibly could, but there's constraints. Has it been zoning? Is it cost of materials or something else?
So it's kind of a compounding problem, in my opinion. So when you start out at the city, every subdivision, just to get a house on the ground, has a minimum of 1,000 pieces that have to go through to get a house on the ground, right? Not to mention the number of people that you deal with. But just starting at the city level, taking a piece of raw dirt and being able to get it approved to become a subdivision, that can take anywhere from 6 months to 3 years. I mean, it just depends on the piece of property, and kind of a lot of different parameters that go into it. So in that time period, population keeps growing, and we haven't even gotten the subdivision on the ground yet. So now, with a lot of the inflation that we've had, the cost of getting it on the ground has gone up as well. So, landowners want more money for their land. Workers today want more money for the work that they do, right? And it's all just kind of compounding. And when you get all the way down to the house at the end of the day, the person that bears all of those costs is the buyer. And so, because all of that has to be recouped somehow, right? So I think with all those compounding costs and timelines from everybody, that's where the hurdle comes with getting product on the ground and meeting those demands.
Yeah, that's a really good point. Before I ask my next big question, I'm just curious about the labor side of things. Have you seen labor costs go up tremendously, or are they holding steady?
So they're actually holding steady now. Over the last couple of years, they have gone up. I always kind of tell people it's because this is a very popular question, right? What I always get from home buyers is, well, we're waiting for costs to go down. We're waiting for the price of the home to go down. And so I always ask them, it's like, hey, well, what do you do for a living? It's like, well, I'm a coder. I'm in IT. I say, okay, great. So you code today and you get paid X per hour to code. I said, are you willing to get paid less than X tomorrow to do the same job you're doing today? And they're always like, no, not at all. I was like, well, neither does anybody else, like an electrician, a plumber, a framer, the hundreds of people that we deal with. I said, prices aren't going down. We just have to be able to get on some balance where income and the new pricing matches. And that's where the hurdle becomes, in my opinion.
Right, right. All of this alludes to that there's a lot more complexity in building a home, building and selling a home than people really realize. So, what would you say are maybe one or two major misunderstandings that buyers have about the complexities of this finished product? You see the house, but they don't know the struggle that it took to get there. From your experience, what are the biggest misunderstandings?
Probably if I were to give the two biggest is just the timeline and the amount of work that goes into putting a house on the ground. People show up and the house is beautiful, it's finished, and they love it. And now they're just trying to figure out how to buy it. But to get a house on the ground for us, for an entry level home, you're talking 4 months worth of build time, permitting processes before that, infrastructure install before that could be another 12 to 18 months. And then just getting it entitled and ready to become a subdivision, like I said, could take anywhere from 6 months to 3 years. So you could be 5 years on a subdivision before you ever put the first house on the ground in some cases. Some can go faster, but that's the kind of effort that goes into it just to get there. I think that's one of the biggest misconceptions of where homeownership comes from is having the inventory there in time. In my opinion, there are a lot of people don't appreciate having that house available to live in. And I think the other half of it is the amount of risk that goes along with it. Being a full developer and home builder, we take on a lot of risk along the way, right? So we get a lot of loans, we deal with a lot of contracts, we deal with a lot of different risks that get involved. And we do it to make sure that we can provide that home. And it's not just in the home residential portion either. You can compound that on apartments. So when we build a multifamily unit, that timeline can get extended. And so we're taking a guess today on the validity of that multifamily project being valued at XYZ in the future, not knowing what the future is going to bring. So that's kind of where we started the conversation, right? Is when you go through up markets and down markets, we've got to shake our crystal ball to try to figure out what it's going to be like in 3 to 5 years.
Hmm. If there was one part of that of the process between the timelines and the labor that you think needs an overhaul, has a ton of room for improvement. Like I can imagine the entitlement is a slow bureaucratic process, and that should be sped up tremendously. Is there something like that, or other parts of this bloated timeline that you think could be compressed, and maybe how might that happen? Is it going to happen in the next few years with technology?
I think at the end of the day, we're still relying on people to
Hmm.
make things move. I think technology can help things move faster with checks and balances, but the people component of it is where the biggest hurdle becomes, right? Because no two municipalities work the same. I've been in dozens and dozens, if not 50 different municipalities, and the system is not the same for each municipality, and each person is different in each municipality. So every project you go into, that's the biggest constraint, is trying to figure out that process in the people you're dealing with, and kind of how to manipulate getting that to fit their box, which is different everywhere you go. So
Hmm.
if there's one area that would need a big overhaul is getting some kind of system in place where every time a developer goes into a city, they would have a very clear, concise, this is what the process is. And so that's probably the biggest hurdle out of everything that we do. Because once you get it on the ground, we've got systems and operations in place where the structure can go up quickly. It's just a matter of getting it to that point where it's ready to go.
Sounds like there's a big need for standardization, and
Yes.
that is the foundation for really strong execution. And this is a nice segue into the next question I had for you, because in order to execute efficiently, you need systems. And you said you have systems, you know how to put up the house. It's all of these external factors that slow down the process. So let's talk about execution. For you as a builder, what does efficient execution look like as opposed to just busy work or trying to get things done?
So that's a really good question because when I look back at when I first started, I didn't know how to even pick the right contractor or the right framer or the right plumber or any of that, right? It's over the years of experience, I've learned now that execution to me means knowing how to pick the right person to get on your job, to do the right job, meeting code, timelines, quality of work. All of that goes into being able to execute and get a finished product that not only is good for the customer with quality, but has a long lasting code aspect to it. You get through all your inspections on time. It's real easy to go out and hire somebody, but for them to do the job and get your inspections to where you're hitting timelines all right, it's not as easy as people think.
Well, speaking of things that are not easy, the other half of your job is that you have to raise capital to get all this done. So investors are looking at you and trying to decide if you do have what it takes to execute, if you do have the right team, if you have the right partners. So when you approach investors and you say, we want to develop this subdivision, or we're going into a new project, or we've got a multifamily asset that's going up, what's the first thing that you do to establish trust in that relationship? And then what are other things that investors are looking for to determine if you're good with their money?
That can go a lot of different ways because we're still dealing with individual people, right? So each person has their own comfort level that they can get to. I deal with some investors that are familiar with the construction industry and they just want to know you got a system in place. So it's easy for me to sit down with them and show them how I can sit in Dallas, Texas and monitor a project in, Byron, Georgia. So I can see it all with AI and all the current software that we have these days. I could sit here and monitor the whole entire project from afar. So they want to know that you can do that. Other investors that are unfamiliar with the space, they want to see your track record. They want to know that you've done it, you've been successful with it. Um, in today's world, execution is everything. And that's why I say execution and a lot of the things that we do is it takes a lot to be able to execute one of these projects, especially on a multifamily project. There's a lot of working parts, moving parts, and they want to know that you can navigate them and that you're bringing people onto that job site that are going to get the job done. So worst thing they want is to have an uncomfortable feeling that, well, this guy's just guessing. So having the knowledge to be able to show them and walk them through the process and get them comfortable with what we do is the biggest hurdle that we have with investors.
Hmm. What types of investors are these? Is it like accredited individuals, family offices, private equity firms?
So all of the above, and we also have a lot of friends and family. After nearly 30 years in the business, a lot. You get to know a lot of people, and word of mouth is probably the best. But yeah, we've expanded into accredited investors. We've grown large enough now that our goal is to get to where we want to be as a company, which is in the top 100 builders. We have to take on accredited investors, family offices, funds, fund managers. All those guys are who we talk to these days. And that becomes more spreadsheet oriented.
Yeah, I was going to ask, how does that relationship differ compared to people who trust you, they know you can execute, versus folks who want these huge workbooks and Excel sheets, and they're going to go over every single number. And because I mean, they're very quantitative, especially those fund managers. That's how they think. That's how they
Absolutely.
operate. And they have so much capital that they're deploying. You might be one of 50 different deals that they're looking at, and they're just hoping that if 40 of them fail, 10 of them make enough return to make up for the other 40. So, how are you finding these investors? I always find this part very interesting because it's it's something that you have to go about very carefully, finding investors, building up that relationship, and then also identifying who maybe you don't want investment from. Like some folks are, you give them, or you take their money and they'll call you 20 times a day and just get frustrated or threaten lawsuit, like all that type of stuff. So how do you go about this, finding investors and whatnot?
So I treat, after years of experience, I've just come to this recently, like in the last few years. I treat my investors kind of like we're marrying each other. So you got to spend some time with them. You got to get to know them, what's important to them, and almost like you would, getting marrying somebody, because technically you are going to marry them for the life of this project. And sometimes I've done multiple projects with one investor. So you get to know them, you get to know the type of people they are, what their end goal is, because at the end of the day, we're all people and we all have certain goals. So for me, when I know I have a goal alignment with an investor, I know we're working towards the same thing. And that helps, because you're right. There are some investors, it's just better to let them go put it into what they're familiar with, right? Like, I'll give you an example. A dentist, I don't know anything about cleaning teeth. He doesn't know anything about building a house. If we don't have anything in common other than that, I mean, it's not going to work, right? Because he will be calling, right? He or she will call you every week. Hey, what's the progress? What's the progress? What's the progress? And you spend more time dealing with that than you do actually doing the project. So you do have to be very careful with your selection with investors. Accredited investors is probably the best way to go, because there's also a dollar amount that if somebody's able to put in like $100,000 into your project, well, they're probably more of an accredited investor that somebody's going to put in 20,000. So if somebody puts in $20,000, that could be all they have saved up right now, and it becomes more important, right? So you want people that have a little bit more expendable cash, so that they're not stressed over what they invest.
Right. I imagine that illiquidity is a huge factor in that. We already covered that projects can take years to come into fruition. And so if you need that $100,000 within a year, but it's already being spent on materials, you can't get that back until the exit. So
Yeah.
definitely having or finding folks who have disposable income is the better route. Well,
Mm-hmm.
let's take a perspective here. So imagine that you're a new developer. What advice on the do's and don'ts of fundraising do you wish that you could have known? Let's go back in time. You're just breaking ground. You're approaching your first investors. What works? What doesn't?
I would say, from a developer aspect, you never know what you don't know. That means that you really need a bigger contingency in place to make sure that you can plan for the hundreds of things that can go wrong along the way. And so keeping your investors' money safe is the key. And anytime one of those things can go wrong can change that risk level in a heartbeat. And so if you think you need $2 million to run this project, you probably want to raise 2.3 million or 2.5 million, depending on your contingency strategy, or the size of the project. If you think you need 6 months to do it, you probably want to plan on 8 to 12. So extending your timeline so you can kind of, under promise and over deliver. That's what's going to keep you in the investor world and keep your investors happy. We all know there's risks. Sometimes a break even is a win, right? Everybody gets their money back. We live to fight another day, but that's part of the business. And so, I think getting investors involved, you just treat them like your spouse. You value their money. more than yours, and you just keep them up front.
Are there any examples, and you don't have to expose yourself, but any examples of like maybe something that didn't work out so well that if you could have gone back and if you could go back and fix it, you would?
So absolutely. One thing, the reason that I don't build custom houses anymore is because on a custom house, you're dealing with somebody's vision in their head, right?
Mm.
And so sometimes if that vision doesn't work out in real life, that project can go sideways real quick, right? So being able to see those signs in the beginning is a very, very tough with your clients. And so if you're building for a third party client or you're taking an investor that, has a lot of questions, those are great, but you got to be careful what questions they're asking because that could be a big sign of like, probably shouldn't be doing this project. So I had a project that we took on for a custom job and it was very inexpensive. The guy didn't want to spend a lot, which is normal, but the taste was different once we got in there. And so we had to cancel the contract halfway through. And, nobody likes that. So it happens. It's part of it. But it's also the reason why all of these contracts are written the way they're written. You have AI contracts, you have your state contracts, your real estate contracts, all of them are written with a way out because it can happen.
I'm curious about the resale value of a custom home. This was definitely not on the script, but as you
Yep.
said that, like people have this vision that's very acute to their own interests. And if that's not a forever home for them and they sell it at some point, like what does that look like in a transaction?
So it was funny because I was having a conversation with an appraiser the other day, and I love asking this question. I'm like, how do they come up with the value? And he was giving me a whole list of parameters that he follows. And now, AI can pull a lot of that stuff. So he was like, he's embracing the world of AI. And when he got done, I said, "But isn't the true value of a piece of property what somebody's willing to pay for it?" So the only thing that comes up in a custom house that can control the future value is finding that one person that likes the same thing you like
Hmm.
and sees the value in what you did. We've done some crazy stuff on custom homes. I could bore you to death with some of the things we put in with hidden walls and doors and just all kinds of stuff. And you just have to, when you go to sell it, you just have to find the person that appreciates those items.
I mean, that sounds pretty cool. Like if I buy a house and there's a hidden door to a speakeasy bar in there, I think I'd pay a little extra for something like that, just for the wow factor. I I see why people build custom homes.
Yeah.
Um, it's
I know
yeah,
where there's
it's
one
it's
like that if
fascinating.
you want to buy
Is it around town?
it. There's one here in Texas.
Down in Texas, of course. It could be a speakeasy and a gun safe and a bunker as well. You slap the wall and like 007 style spins around and go on in.
Yeah, we've done some crazy stuff like that. But yeah, you just, when you go to sell it, you got to find somebody that sees that same value.
Hmm. Right, right. Well, lassoing things back on track here. One of the last questions I wanted to ask was about, since your experience is so diverse. I mean, between custom homes, remodeling, and mortgage notes, which we didn't get into, subdivisions. Um, I want to ground this in home ownership again because I stated how important it is in general, and then also to you in the beginning of the conversation, and we talked about it being the American dream and whatnot. But there's a financial play in it as well. That's compared to renting, you have this opportunity to develop equity. Like if you have a mortgage on a home, that actually means that you don't truly own it because you miss a payment and the bank is going to take back your home.
Yeah.
But the unique advantage over renting is that you do have that accumulative equity, that it grows over time and then the payments reduce over time as well, which is not true in a renter's situation. So how do you see this as being maybe a cornerstone of building wealth throughout someone's life cycle? They're going through you're starting a family, you buy a home, you're paying into that, and I think you mentioned it could become part of a retirement strategy. Like, let's hammer home the importance here of building equity in something.
Sure. The basic of all investing in life or future wealth is about the long-term play, right? So everybody likes to go high risk and do short term, get rich quick and all this kind of stuff. But home ownership gives you a very distinct long-term play from what you said, from an equity standpoint. You know, if you look at the historicals and in today's world, you can Google it, home values double about every 10 years. And so if you look at the house, most people don't live in their home 10 years, but in that 10 years, you gain a big equity lift. And I'll use some numbers just as an example. And I'm no accountant or a financial advisor, but I will tell you, if you buy a house at 300,000, the value goes up over time. You can sell it at 350. You've already made 50,000. The ancillary investments that go along with it that people don't realize is that you're right, you get a mortgage, but you can write that interest off on your taxes. You pay taxes on the house. Well, you can deduct that as well. So you get a lot more deductions through home ownership through your income throughout the years that compound that money that you make along the way. So, and then when you go to sell it, the U.S. has a law that you can make up to 250,000 or 500,000 as a married couple, 250 as a single person, as long as you live in the house for your primary residence for over 2 years in the last 5 years. So there's a lot of mechanisms that education for home ownership can really show people how you compound your portfolio with ownership in a house. And we spend all of our time going to school to learn our trade, but nobody ever teaches the benefits of this home ownership along the way and the ancillary things that go along with it, right? People look at the maintenance costs and things like that. But even if you have, worst case scenario, you have, you pay insurance. So most of your cost of maintenance is going to be covered by insurance a lot of times. But even your marginal stuff, like, I don't know, maybe a hot water heater goes out. You spend $1,000 to replace it, but in 4 years you sell the house for 50,000 more. You're still ahead.
Great
So I
points.
think a lot of those things about home ownership are left out, right? People just want to look at the cost of what it's going to cost.
Right. There needs to be more education on this for sure. And I hope that this conversation has brought quite a bit of insight about some of those perks, also the realities of home building, because again, people see the finished product, they don't understand everything that went into that, and also on a broader scale, like why we might have some of the shortages that we have. It's a complex industry and market that we take for granted, quite frankly. Well, my last question, looking at 2026, 2027, is there anything that you're looking forward to in the residential space? Maybe any trends that you're predicting in the market?
I wished I had good news for that. I think we're going to get a lot of what we've had in the last year and a half in the next year. Sometime towards the end of 2027, mid 2027, would hope for anyway. We might see a little bit of adjustment where we start seeing things pick up again. But my outlook right now for all the markets that I'm in and different things, we're probably going to be on this path for a little bit longer.
Well, David, it's been a pleasure having you on the show. Where can folks get in touch with you, and for what?
So we raise capital for our next projects. We also have portfolios that we're starting to build where we can build different products and we want to own them and keep them. We want to build our portfolio so that we have our, I guess, pool of people that we can teach about home ownership so that we can rent to them, have a captive audience to where we can teach them how to how to have home ownership and then move them into a house eventually, whether it's with us or the next person. But so we have assets that we are going to put in our portfolio that we need capital for, or, if somebody just needs to walk through a project and get some advice, we also do a little mentoring here and there. So if somebody has a project they'd like some a third look at or a fourth look at, we're happy to do that as well. So you can certainly find me on LinkedIn. Name of our company is Wind and Water Homes. We have our website as well. You can go to windandwaterhomes.com. And of course, we have emails and everything on those sites.
Perfect. Well, I will have links to your LinkedIn and to Wind and Water Homes as well in the show notes of this episode, where folks can scroll on down, get in touch with you. I appreciate your time here. It's been enlightening. It's been a very unique conversation again for the show. I mean, we talk a lot about construction and developments, but not so much on the residential side. But it's very important. It's a big, big market, and it impacts every single American. But even throughout the world, it impacts everyone. It's a global phenomenon, home building. So thank you very much, David. Appreciate your time here on the show. Hope everyone enjoyed, and that they're going to give us a big thumbs up, a subscription, a 5 stars wherever they're listening. But I hope 2026 finishes out very strong for you, David.
I appreciate it, Matt. Thank you for having me.
Of course.